Welcome to FD Markets. Today we're looking at foreign direct investment, something that should show what a company feels about the prospects of the country that it is investing in. But if we look at the standard balance of payments data produced by people like the IMF and UNCTAD, the United Nations Trade and Investment Body, we find that FDI is remarkably consistent. But if we look at other figures, that's not always the case. Here to talk about this today is Courtney Fingar, head of FDI magazine here at the FD. Courtney, we've got a couple of charts to look at. The first one shows FDI into developed markets. And as you might expect, the UNCTAD figures show that there was a peak at the crisis and things began to cool down after that. But your figures of Greenfield only investment show something much more consistent. What's going on there?
Well, I think first of all, it's important to state what we mean by greenfield investment. As far as we're concerned, this is a company putting a physical facility in a foreign country and adding headcount. This can also mean a major expansion of an existing facility. Right. And greenfield investors operate a little bit differently than other types of investors. They tend to be more risk averse for a start. They will chase growth in emerging economies, but they also will pull back if things look a bit dicey. With what you see with the advanced economies is that's kind of a constant. It's not very volatile. That's because these are countries that greenfield investors feel comfortable with. You don't see huge inflows of investment because the project figures tend to be smaller. You don't see giant $8 billion facilities like you see in some of the major emerging economies. So it's a bit of a consistent. And actually after crisis, what you see is that investors will pull back a bit and seek safe havens, or what they perceive to be safe havens after the crisis. Right. And that's why you see a lot of consistency there.
But when we look at the big balance of payment figures, that includes M&A, it includes intercompany loans. So it is what, the intercompany loans that we think are falling back since the crisis?
And also a bit of M&A. I mean, you can see the big peak here there, and that's when there was a global boom time and money was flowing around all over the place, including even in the advanced economies. Everyone was bullish on pretty much everything. Yeah. And you saw a major drop because, first of all, it's easier to pull that money back. I mean, with a greenfield investment, you have some physical facility. It's not so easy to just close up shop and go away. So you'll see that money was rushing in, but it was rushing in pretty much everywhere around the world because there was just so much money flying around. Right. And you see that it dropped quite drastically and quickly after the financial crisis.
Yeah. Okay, let's go on to our second chart, which looks at the same figures for emerging markets. Now here it's quite different. The balance of payment numbers hold up quite well. They grow up to the crisis as they did in the developed world, but then they stay fairly consistent. But the greenfield stuff is falling quite sharply. It's more volatile and it's come off quite a bit. What's happening in emerging markets?
Well, I think it's interesting if you look at 2008, this was a high watermark year. And this again was pre-crisis, and greenfield investors were extremely bullish on emerging economies. They were chasing growth. Yeah. It's interesting, of course, our figures are bigger than UNCTAD's figures, and that's really just due to a difference in methodology. UNCTAD uses our greenfield data, it feeds into their overall FDI headline figures, but we consider announced projects because how do you calculate when the money will actually hit? So we go with the moment the money is announced, and UNCTAD have a different methodology. They take our projects and our data and apply their own methodology. So that's the biggest discrepancy. You'll see what that means is in 2008, what we tracked were quite a number of mega projects, and that was skewing a little bit the data. Of course, what you see post-crisis, which you didn't see on the previous slide, is that investors pulled back immediately from emerging economies, and that's because they became more risk-averse. We saw increases in investment in places like the US, the UK, and Canada post-crisis, where investors were getting a bit nervous about some of the developing economies.
UNCTAD hasn't prepared figures for this year yet. It's not over, obviously. You've got figures up to the year to October. That looks proportionally as if it's holding up reasonably well. Is that the case?
It is. This data is up to October. Our database is live, so it's updated in real time. And as you said, UNCTAD will wait until after the year and publish and study all the figures. There's some interesting things. So as we've published a story on EM Squared that showed actually huge decreases in investment mid-year 2015 versus mid-year 2014 for the majority of emerging economies. So if you take it country by country, we are seeing some dramatic declines. What's keeping it holding up is increases in countries such as India and Indonesia. So that's bolstering a little bit the overall flows. I suspect by the end of the year, what you will see is it probably will plateau a bit and be a bit even. But if you look at the countries individually, there's some worrying things going on there.
Thanks very much, Courtney. So quite a bit of variety going on in emerging markets, some holding up, others falling more sharply. Let's see how the year progresses.